Hello guys, Jay here, and we are back with a 5-step bookkeeping series. Now that all expenses and income transactions have been added to the books, it's a good time to run reports and start analyzing. Okay, so the first part will be we will be having a quick tour. How to access reports, how to customize reports, how to save a report for quick access, and how to extract reports to Excel. So first, how to access reports. Here in the dashboard, just click reports. You will be presented a lot of reports here. Depending on the subscription that you have on QuickBooks Online, you may have more or less. So the most common reports that we use are profit and loss, balance sheet, statement of cash flow, profit and loss, percent of income, accounts payable aging summary, and accounts receivable aging summary. Now let's open one. Profit and loss is the most common report that business owners use. So to customize reports, we can change the report period. Usually this will be this year to last month. And we can change the columns, whether years, quarter, or months. So it looks better and you can tailor it to whatever you need. We can further customize it by comparing it to another period or previous year or year to date or percent of income, whichever do you need. So let's try comparing it to previous period and select percent change. Monthly is not ideal. Let's use years instead. So years is better. So if you want to save a report, let's put it back to the way that we want it before. If you want to save a report for quick access, just click Save Customization, type the name that you want, add it to a group or create a new group, and share. You cannot share it because it's a sample company file, so just click Save. It's saved now as custom report. So to access custom report, just go back here on report list and go to custom reports. And we have here what we have saved. It's strongly recommended for you to save a report that you have customized so you can open it faster from time to time. So how do we extract reports into Excel? Just click the export button here and select export to Excel or PDF or add to management reports. Let's select export to Excel. Open the Excel report and here it is. You can customize it depending on what you need, or you can transfer it to Google Sheet and use it however you like. Now we will be discussing about the three basic management reports. The first one is profit and loss. It's a financial statement that summarizes revenue, costs, expenses incurred during a specific period, usually a month, quarter, or a year. The basic parts of the profit and loss is the income or sales, the cost of goods sold or cost of services, the operating expenses, other income or expense, and of course, the net income or the bottom line. Let's see how does it look like in QuickBooks Online. So here it is a profit and loss report by month for the current year. You see this is the income section. You have your income or sales here. Here is the cost of goods sold or cost of services if you have a service business. Deducting cost of services or cost of goods sold from total income or sales results to gross profit. And here comes the operating expenses. Usually the most number of accounts here are the operating expenses. So you will have advertising, legal fees, person maintenance, office expenses, rent, utilities, travel, etc. Deducting operating expenses from your gross profit results to net operating income. And here comes the other expenses. If you have other income, then it will be shown here too. and then adding or deducting other expenses and other income from net operating income becomes your net income. Net income is the bottom line, and that determines the performance of your business for the period. And now we have the balance sheet. Balance sheet is a financial statement that reports a company's assets, liabilities, and owner's equity at a specific point in time. It provides the basis for computing rates of return for investors. And here are the basic parts of a balance sheet. Number one, assets. Things or properties a business owns that provide economic benefits. Number two, liabilities are amounts a business owes and are usually a sum of money. Number three, equity. The amount of company's assets that the owner owns. It means all assets less liabilities equals the equity. Now we will have some balance sheet examples. For example, assets. Common examples are cash, accounts receivable, inventory, prepaid expenses, and fixed assets. While for liabilities, common examples are accounts payable, credit card, loans, tax payable, accrued salaries payable if you have, and mortgages. While for equity, you will have owner investment, owner capital, owner's pay and personal expenses, and retained earnings. Now let's see how a balance sheet looks like in QuickBooks Online. Go back to the report list and let's open a balance sheet. Let's customize it to this year to last month and make it monthly. So the balance sheet has three major sections. First, here are the assets. You will have current assets at the top, and then fixed assets or non-current assets. Most important current assets are your cash account or bank accounts and accounts receivable. If you have inventory, then it will be shown here too. While for liabilities, you usually have accounts payable and credit cards, other current liabilities, and long-term liabilities. Notes payable and mortgage payable are long-term liabilities. After liabilities, we will have the bottom section, which is equity. So we have here retained earnings, opening equity, and net income, which is coming from the profit and loss. Net income becomes part of retained earnings once the year has been closed. And that's the different sections of a balance sheet. It's best to compare it from time to time on a monthly basis to see how your assets, liabilities, and equities are growing or moving up and down. So next we have cash flow report. Cash flow report is a financial statement that captures how much cash is generated and utilized by a business in a specific period. Utilized or consumed means used by different activities of the business. We have three basic parts of cash flow report. First is operating activities, which are cash transactions coming from operations. Second part will be investing activities, which are gains or losses from investments. Common investment activity is a purchase or sale of fixed assets. Last, we have financing activities, which are cash flow from company funding, either through debt or loans, or owner investments or payments. Financing means how the owner or the business is getting cash or funds to support the activities of the business or the needs of the business. There are two major methods on how to do cash flow report. The first one is indirect method. It calculates cash flow by adjusting net income with differences from non-cash transactions. Non-cash transactions are transactions that doesn't directly involve cash. Second one is direct method. Direct method uses the real cash inflows and outflows from company operations, which means you take the real sources of inflows of cash and the real payments that are the outflows of cash. So, collection from sales are direct cash inflow, and payments of expenses are direct cash outflow. So, naturally, direct method is more understandable to the business owner. You can easily understand direct method because it takes your sales or cash collection going in, and then your cash payments for expenses going out, and you will have the net cash flow at the end. Now let's see how a cash flow report looks in QuickBooks Online. So for a statement of cash flow, we can customize it again and make it monthly. Now QuickBooks Online uses the indirect method, so it starts from net income and adjusts non-cash transactions. So when accounts receivable balances increased, the cash decreases because it means you have lesser collection. When accounts payable increases, the cash increases because you have not paid your liabilities. Next from operating activities are investing activities. If you have bought a fixed asset, then that's a deduction. For financing activities, if you have obtained a loan or a note payable, then that's an increase in cash. And at the end, we will have net cash increase for the period. And that's the different parts of a statement of cash flow. Operating activities, investing activities, and financing activities. When you customize your report, it's always good to include your beginning balance of cash here at the end, and then add the net cash increase or decrease for the period, and you will have your ending cash balance. So next we have supporting reports. First is profit and loss vertical analysis for the percent of income. It shows how total sales is getting divided or allotted or consumed by cost of goods sold items and operating expenses. So in QuickBooks Online, let's go and run a vertical analysis. Profit and loss as percent of total income. So this is the vertical analysis. We can see what percentage of the total income are being consumed by the cost of goods sold and the different operating expenses. And finally, how much is being left as net income or bottom line. 16% is a good percentage already. If you can make it higher, up to 20%, then that's very good. Next is AR aging summary. It shows how much receivables are getting overdue. You must avoid growing overdue amount because that means you are not able to collect your sales and that will be problematic to your cash flow. And if you are not able to collect your sales, then that will be bad debt and that's a loss to your business. Let's see how does AR aging summary looks like in QuickBooks Online. So here is the accounts receivable aging summary. It shows which customers has current amounts, has overdue, and how long the amounts are overdue. So anything over 60 days, I think that's already bad. And you need to enforce collection to lower down your overdue amounts. AP aging summary shows how much payables are getting overdue. Be sure to pay your overages. So in order to maintain a healthy relationship between your vendors and contractors and other people that your business pays, be sure to pay them on time. So let's go back to QuickBooks Online and run an AP aging summary. So here on the AP aging summary, it shows the current amounts for your vendors and the overdue amounts. Be sure to pay the overdue amounts to avoid problems with your vendors or contractors. Now let's discuss some things that you should do. So in using reports, these are things that you should definitely do. Number one, customize reports according to your needs. Number two, save reports for quick access. Saving reports saves your time. Number three, analyze and understand the reports. Number four, use at least the three basic management reports. Number five, take trainings or lessons to better understand the reports that you have. Number six, use the reports to improve your business or improve making your business decisions. And last, review the reports at least on a monthly basis or even on a daily basis. Note, don't limit yourself to using only the profit and loss. So I have worked with a lot of businesses, and oftentimes a business owner only looks at his profit and loss report. Profit and loss is a great report. It shows your income and expenses, but that's not enough. You should use other reports that helps you understand better your business. And now for the last part, we will be discussing about KPI reporting. So what is KPI reporting? KPI reporting facilitates the measurement and analysis of important business performance indicators. Some of the key performance indicators in amounts and percentage are sales trend, cost of goods sold or cost of services trend, operating expenses trend, gross profit trend, and net income trend. You can create other trends that you like or you need. Now let's look at an example of a KPI report. So here, in a profit and loss KPI report, we have sales trend in amounts and a chart that shows it visually, cost of goods sold, expenses, and net income. So using this KPI reporting, you can easily see if your sales is going up or down, cost of goods sold and expenses are getting up or down, and how is your net income growing or losing. We can set target amounts so we can benchmark the performance of your sales, cost of goods sold, expenses, and net income. So for example, if you have a target of 50% of cost of goods sold and 30% of operating expenses, then you will have a target of 20% net income. We can derive the target sales from that and compare it to the actual sales. Now, sometimes a monthly basis doesn't make that much sense, so we can also use a quarterly one. Quarterly one summarizes each quarter, so you have lesser amounts to compare, and sometimes it's more understandable. So we can see immediately here that sales from the first quarter decreased to the second quarter, and the cost of goods sold decreased also, as well as the expenses, and the net income has increased. Aside from using amounts, we can also use percentages. Percent of sales will always be 100%, so we don't include that here. So instead, we use gross profit as percent of sales. So if we target 50% as gross profit, then you can immediately see whether you are meeting it or not. The target percentage is there at the top, and the percentage here is way below. So for cost of goods sold, it shows that the actual amount is over the target. You will think of finding vendors that offers lower prices or increasing your sales price so you can cover better the cost of goods sold. So we can see here that the expenses trend shows that the expenses are way below the target, and that's a good thing, meaning the expenses are being maintained less than 30% of sales. And for the net income percentage is way below the target, and that's not good, mainly because cost of goods sold is higher than the target percentage. So if you are able to make it lower, then the net income will go higher. And that's it for step number 4, running reports, analyzing reports, and revising or finalizing reports. If you have more questions, just comment them below and I will answer those. You can also message me on Upwork or invite me to a project or job. So stay tuned for our next video. And if you learned something, please hit the like button and subscribe to our channel.